Today we're going to have a look at the macro outlook, and we will see whether the crypto market has been good this season and if it's going to be a bull December or if it's going to be Doomcember. So let's get straight into it, and I'm going to start off with of course, the economic calendar. So yesterday we did have Jerome Powell who spoke. He didn't really say anything that we didn't know. He basically repeated the exact same message that he has from the previous meetings that he's had. And if you have a look over here at this tweet from TED Talks Macro, he says, following Powell's speech, the market is now pricing in a 77% probability that the Fed slows the pace of hikes to 50 basis points in December. Slowing the rate still means that they're raising, even though it is slowing down from 75 to 50. And he says PCE could shift this drastically. So keep a close eye out on the PCE data, and let's see what that comes out in later on, I think this week. And Dylan Leclerc says, here is what I would say if I was Powell and I was tasked with deflating asset prices with monetary policy and Fed speaking. It would look something like what the Fed has done this year, talk the markets down. And then when the volatility starts to get out of hand, you just ease off and then you talk it back up again. And pretty much the point of this is that if you do look at the markets from a structural perspective, the selling has been so methodical and slow and steady. It's completely controlled, and you do need to keep an eye on that. It's worth playing all the dead cat bounces and the relief rallies, but you need to wait for more pivotal data in order to be sure that the market is shifting. So what would that look like? If you look at Jaran over here, he says that great insights from Arcane Research ahead of Curve Report. And he says BTC's bear market has now lasted at lengths comparable to the bear market of 2014 and 15, as well as 2018, which I did tell you guys, we've outlined this using that whole tweet thread that I did and that whole show dedicated to what a potential market bottom could look like. And you can see we're really nearing those final stages, which means that, you know, long-term accumulating for the high time frame horizons, if you are looking at a long-term perspective of holding crypto and Bitcoin, then this would be right around those best opportune zones that you can find. So 3-month chart, quarterly still has this entire month, the whole of December to close, and we'll see what that looks like. Looking at the data over here, it pretty much, this chart would still be telling me the same thing. Look for a tag of this zone over here at the very least, which is 13,880. It requires a lot of patience if you are looking to buy the dip and you want to buy ultimate bottoms. Next level, if it were to happen this month, comes in at exactly $10,839. That is on the 3-month chart. So that's what I'm looking at over there for Bitcoin. And then if you have a look at this tweet over here from Stock Money Lizards, quite a bullish account. Actually, he's been bullish for a while. So we'll see how that ages. He says, yeah, we are all experiencing the fourth big bear market for Bitcoin and cryptocurrencies. One thing is for sure, the recovery will be extraordinary. The risk for another dip is low, but the chance for markup much higher. Basically, what he's saying over here is if you look at the Heikin-Nashi candles, I will show you another chart with that as well. That's that Japanese candlestick technique. This is on a monthly chart, though. You can see it's one of the most extended that we have had. And if you do compare to the second and third cycle, it's pretty much looks very similar as a fractal. So keep that in mind. Just another sign that it can't potentially get that much worse. Like, I hope I don't eat my words on that, but it's kind of like, you know, 15,500 or wherever we bottomed. If that is the ultimate bottom versus 10K in the great scheme of things, again, I'm only talking to those of you then who have a super high time horizon. How much difference is that really going to make? Okay, looking at the MACD, you can see we have now another histogram that is cooling down over here, so starting to move towards the upside. It's moving up slowly, the colors changing over there, and eventually this will create a massive divergence. And then importantly, the RSI is changing its slope over here. So I said, let's wait for the new month and we'll see once we get that data. There is now a slope change, which is a good thing. That is what you want to see as this starts to tick back up. Maybe we'll look back in the future, and this would have been a great accumulation zone. For those of you who have not watched watch that video of how I show how you can potentially buy the bottom or near to the bottom, then go and have a look out for that video. I think the strategy remains the same. I'm not going to change my strategy with regards to that. Monthly chart also saying the same as the quarterly, looking for a tag of the strong horizontals. That is yet to come. But it again, zooming out, this is probably generally all a decent zone to be buying in for the long term. Now, high Kanashi candles also on the monthly chart over here. Caleb also took a look at them, and he says that today is the final day of November, and Bitcoin is going to produce the 12th consecutive red monthly high Kanashi candles. After 5 months of red candles, a green monthly candle has marked the end of each bear market. Each red streak has been longer than the last. So eventually we will get a green candle, and eventually that will mark the bottom. But again, I will say to you guys that the trend is your friend until the end of the trend, and we do have low time frame techniques that can be used to front run this idea. And it's the same thing. You just keep moving that level down. As the market goes down, then you have a new level to clear. Then the market goes down further. You now have the next level to clear. And I've been doing this pretty much for the whole bear market, and I'll continue to remain patient before I start to enter with my major money, my long-term positions over there. So a high Kanashi on the weekly is still red. And the question is, will it tag this level? What may happen, though, is you may get very, very close like we are now. And then you may start to see a couple of green candles in the same way that you did over here, thus further frustrating people. And then ultimately, it may only come next year that you hit the zone. So do prepare for that. That is a real possibility when it comes to the weekly chart over there. Now, one thing that you are seeing on the weekly chart is from JJ Cycles. Just can't help it. This continues to stare me in the face. And it is a bullish divergence on Bitcoin. So you can see price over there. You have 1 touch, 2 touches over there. And then when you look at the RSI, you have 1, 2 touches. Now, typically what you want to see for great confirmation is 3 touches for a bullish divergence. And what that would look like is a break of this RSI, which would give additional confluence and strength to the thesis of flipping bullish. So you'd want to see the RSI break through that trend line, come down again, make 1 more touch onto that red line over there, if you can see my cursor. And at the same time, maybe price goes down lower for 1 final time into that 10 to 12K region. Then that would be an absolute flashing buy signal for me. And I've said for a long time, that's where I would look to enter. Dylan Leclerc was showing over here, CME BTC futures have never traded this far below the spot market rate. And basically what that means is that we're in extreme backwardation. When you do have extreme backwardation, those are the telltale signs that you want to start looking for a market bottom. So you want to position yourself to look for opportunities to go long. It doesn't mean that you just blindly go long, but you want to look for opportunities, and that's essentially what that is showing us. It's adding confluence. This chart over here is still waiting for the volatility to continue on up. It contracted a little bit down with the recent up move that we've had. Now, a very, very easy chart to use, objective chart to use, is the different moving averages over here. I'll give you them. They are the 3, the 9, and the 30 moving average. And this is put onto a 4-day chart. And what you want to see is price reclaim and hold above all of these moving averages. This has not yet happened. It came close within this region when we were at about 21,100. Once you do that and you have the yellow moving average above the green moving average, which should be above the purple. So all of them postured upwards, pretty much like this. You see those moving averages start to turn like that, and the purple start to turn up like that. And then you have price holding above that. That would be your strong signal to go long and add additional confluence. As an investor, you really don't want to be going long when these moving averages are postured the way they are, with the short below, the medium below the long, and price stuck below. This current price action that's pushing up, all of this is going to be resistance within this area. So if anything, now is the time to remain cautious on you if you are looking to buy big spot bags. And I'm going to show you why as well towards the end of the stream, looking at the low time frames, what is going on with the leverage. So stay tuned for that. Okay, 3-day chart over here continues to remain in an uptrend. This is the inverted chart. It's as clear as day. You have higher highs, higher lows, higher highs, higher lows, a little bit of consolidation over here, high low. breakout through the resistance area. You now have a higher high, and the question is, how will this candle end over here? So again, inverted chart, high highs and high lows means that on the other chart, which would be this one, everything is lower highs and lower lows, and that means that you're in a strong downtrend. So the level to clear currently stands within this region over here. Start to get above this zone, which is coming in at the moment at 21,500. As soon as you see Bitcoin closing above that, break through this level, close over there, then you start to reverse the trend, and you can look to buy any of the following pullbacks like that, and hopefully a new uptrend will be established. But we haven't seen that yet. Remember, guys, patience is required. I understand the market's currently at a point now when it was at like 15.5, and now you're looking at it and it's around 17, and then FOMO starts to set in like, oh my word, soon we're going to be over 20, and then it's 25, and then it's 30. Yes, that can happen. Of course it can happen, but you've already, if you have remained patient and you've used your strategies wisely, then pretty much you should have been well protected, and you would have sold anywhere between about $47,000 and $57,000. And what's the real difference if you're buying back between 17 and 21? Like, I mean, it's just wait for confirmation. So with that being said, dollar cost averaging, that is the name of the game. If that is something you're interested in, then check out below. There is Biswap, so one of the sponsors again. They are decentralized exchange. They are backed by Binance, so they affiliated with Binance over there, which is why it's called Biswap. And you can make all of your purchases over there. All you need to do is click on that link. Make sure you don't go to the wrong link. So click this specific link over here. Otherwise, your MetaMask wallet could get drained if you do go to the incorrect one. And if you are using that strategy that I outlined with the 25% that your dollar cost averaging, this is where I am doing my dollar cost averaging, is through the decentralized exchange. And then I pretty much have that straight onto a hardware wallet. So Banter says, is it just me or is Kyle losing his voice? Yes, I don't know what's happening, guys. I think I got the XRP curse, like the Banter curse, but the XRP community cursed me yesterday because I called out their coin saying that it's going to zero. And Stellar Lumens, it's the whole bunch of those altcoin communities over there. But anyway, moving on. Hopefully I can make another stream tomorrow with a decent voice, and then the weekend recovery should have me back in action for Monday. Okay, this tweet over here, the S&P 500 is down 17% through November, on track for its worst performance through the first 11 months of the year since 2008. Basically, one of the worst bear markets time-wise, without green months, that the S&P 500 has seen for a long period of time, which should also mean that you're positioning yourself once again to look for some upside momentum, right? Eventually, there is going to be, at the very least, a relief rally, and on the medium time frame, you'd probably want to participate in that. Ryan shows here S&P 500 closed above the 200-day moving average for the first time in more than 7 months. Looking at the previous 13 times since the 1950s, it was beneath this trend line for 6 months or more, and then it closed above and showed only once that it moved back to new lows. Basically, what he's saying is that anytime that we held that long below the 200-day moving average, which I'm going to show you on the chart now, and then we reclosed back above that level, we never went to new lows again. The market just continued on upwards. So that is an interesting bullish sign over there. DB also, big account, announced that we have broken back above. So a lot of people are looking at that, including myself. But Michael A. over here, Gayed, who's the CFA, which means we have to trust him if he's a CFA. He says a Fed pivot is bearish. The market is wrong. So if you have a look over here, pretty much any time, and I have outlined this on previous shows before, any time that the Fed did pivot, pretty much the market proceeded to sell off quite substantially in the following weeks. So you do want to keep an eye on that. Just because the Fed is pivoting, essentially going from 75 down to 50 basis points, so it looks like a Fed pivot, you still have to be prepared that there could be lower prices. Now, what would that look like on the actual chart? Well, you can see that we're coming directly into resistance. So this trend line that on the daily for the S&P 500 that's held absolutely perfectly for pretty much a number of months. The first test was in March. Second test was into the 200-day moving average in August. And this is now the third test of that trend line. So will we break this trend line? Well, a couple of weeks ago, I did outline to you guys that what you want to do is you also want to open up the realm of possibility that this may not be this type of a downtrend, but instead it could be a range that would look like this. So if you look at that, you have price ranging within this area. Now that is a possibility. And I told you that as soon as you start to clear the 200-day moving average, you now want to look out for the possibility that things could move higher. And therefore, you want to be very careful with your short trades because a range could be forming over here. So if you break through this trend line, which when I just look at this candle and how strong that daily close was, it makes me think that there's a possibility that today that we push straight through this level, and then you'll be looking to come straight back up and capture some of this liquidity within the zone. Now, I could be wrong on this, but that is a real possibility, which basically what I'm saying is, how would I play this? You could potentially short this level because it's a very, very, very easy invalidation. But because it's such an easy invalidation, it makes me think that a lot of the people will be shorting today with a simple stop loss above. Now, what would happen if they went to grab those stops? Well, that would lead to another impulsive move to the upside like that, maybe a small pullback, and then you are looking to come back up into that zone. So that's kind of the way that I'm thinking. It's tight stop loss could be worth it, but I feel like price could bust through this level pretty quick over here, and then it's going to go higher. That would move crypto with it. So it means look for higher targets on crypto. But ultimately, I do think that it would lead into a trap, and then eventually lower prices would come. You can also see on the S&P 500, there is a bit of a trend line that's starting to form over here. So it's quite easy as well. If you did want to go short, you could kind of just wait. So wait for push through. Maybe it goes higher. And then any retest into this trend line over here could be opportunities to go long until such time as proven otherwise. And then once you start to break down this trend line over there, then you could look to flip back short, and then you're kind of playing this range, right? You can see the range, which is between 43, and let me give you the exact levels. So between, let's just click over here. Your range is between 4,316 and all the way down to 3,642. That is for the S&P 500. Let's quickly have a look at what the DEXY did. I'm assuming that it went down. It will be the first time I'm looking at this chart. Okay, came back into its 200-day moving average, but did, messing this whole thing up, it did test it again and is bouncing off of that zone. So I'm still waiting to see, but the DEXY does look like it's establishing a downtrend over here. So I would just be patient, pretty much not really doing too much. VIX contracted all the way back down into the box. First time we touched this box, we bounced 11% off. I would kind of still be treating this box as anywhere within this area as a strong probability of a reversal, which means an increasing VIX reversing out of the zone would suggest that the S&P 500 is probably going to reject somewhere. So keep a close eye out. Pretty much just remain patient, wait for confirmation, and be expectant that there is a possibility of a bull trap that could be playing out. And that also ties in with what I'm seeing on Bitcoin. And I'll show you why on the lower time frames in just a second. Daily chart. So pushes up into this zone over here. Notice this whole area. This area is going to be very, very tough resistance. You do also have the June lows, which came back all the way over here, and we're very close to testing those. This whole area for me personally is resistance, and that is coming in between 17,600 and 18,200. I will give you precise levels now on the low time frames to watch for triggers and things like that. So yesterday I did mention to you, watch for these stops to be wiped out. That trade has played out pretty much perfectly. Next levels to watch is the June low and the 200 exponential moving average on the 4-hour chart, 17,500. However, I do think that things could go higher than that, just because a lot of people will start to aggressively short. and I think it squeezes into this level over here. This level is 18,150. That's kind of the zone that I'm watching for liquidities to be tapped. So my expectation is any pullback that happens over here is probably going to be brought up quite aggressively into this zone, and then one more squeeze through that level. And we did already call this all the way back on Monday. So go look back on those previous videos. I did warn that this could happen. Now, this chart over here has been one of the most helpful. You can see that I'm just going to delete some of this because every time I use this chart, it rearranges everything. We'll leave the range over here. Here's the range. Yesterday, in the daily candle newsletter, as well as on the Discord group, I warned if you see price get back above this midline resistance over here and hold here, then there's high probability that you're going to target the liquidity higher up, which is this liquidity here. Again, 18,150, 18,250, give or take. So that is the region that you're watching for. Aggregated CVD, which is the cumulative volume delta for spot traders, has been decreasing for pretty much since we made those lows at 15.5. So that continues to downtrend. It has a little tick up over here, but it's nothing really notable. Now, the real one to watch is this, which is the futures, stablecoin futures margin contracts, which is people that are trading on leverage. So the USDT, USDC pairs. And this has been increasing ever since, which means that every single one of these up moves that you've seen, have a look at the margin contracted ones as well. The big spike over here that just happened recently. This entire move is leverage. See, this is not a normal trading view account, guys. So let me just see if I can grab some tools over here. This whole area over here, you can see it matches up exactly with this. But what's happening over here? Nothing. Nothing is happening with the spot. Spot continues to sell off. So what these guys do is they drive price up using leverage. Price goes up, and then they sell more spot. They sell the spot into the higher prices to offload, and pretty much it's leverage traders and retail that get wrecked within the zone. So what I'm saying is you want to be careful going into certain levels. You can see people are already starting to short again. If you look at this chart from, what's this name? Byzantine General. So open interest is increased. Funding rates have turned negative. Negative funding rates means that it's shorts that are jumping into these positions. And this is the chart that we've been using. So the stops have been wiped out. If we take a look at price action over here, and I'll go from the current top, let's use, it's got a magnet on. There we go. So zooming in, let's go to the left-hand side over here. I told you guys, high probability, these stops get wiped out. Look at where current price action went to. So that area over there, tapped it exact. But I don't think it's finished yet. Yesterday, I warned you as well. I said, this move up through this area, watch for a little bit of a bull flag. And then you're going to have another bull flag. And then I told you you're probably going to have another bull flag. And then I said there's probably going to be one more bull flag that's going to go through the June lows, possibly even another one after that, that will tap the final liquidity at the range highs over here, that's the last level, which is coming in at 18,150. That's kind of what I'm seeing. That's pretty much the show that gives you another, let's use the measuring tool here. That gives you another 6.35% potential upside move on Bitcoin. Longs, now you have a better risk to reward ratio over here. So if you did want to long this, you know that if price does come back below the mid-range, which is at 16,959, if price comes back below there and starts to hold there, things begin to change, especially once you clear this level, which is the next higher low. I expect that we might come, best case scenario would be, I don't even think we'll make it that low. I think pretty much right where we are now is where price will most likely start to continue on to the upside, forming another bull flag, and then up we go. So bull flag is a strong upside move, and then a little bit of consolidation, strong upside move, consolidation, upside move, and so forth. And it just continues on that way. That is for the short time frame. And I told you guys in yesterday's show, short term bullish, thinking things go up. Midterm, medium time frames, I think that we still go down. I don't think that the bottom is quite in yet, but things can change, right? Things can change. That's why you have to come with a different plan for each scenario, and this would be the plan. Long up to 18,150. And again, we mentioned that on Monday. When was Monday? If you look at the chart over here, Monday prices were down at 16,000. So I hope nobody says that I got you wrecked. There it is, Monday. Go back on Monday's chart. We were in this area over here. And now the move has got to here. And I'm telling you, it's probably going to get to here. So that's the end of the show, guys. Please make sure you give the video a like, hit the bell notification, and subscribe to the channel. I would greatly, greatly appreciate it. And then again, a shout out to the sponsor of the day, which is Biswap. If you do want to keep your coins offline, so on a hardware wallet, this is one of the ways that you can do it. You just connect your wallet over there, and then pretty much like using MetaMask, you can purchase your coins through here. Goes through the Binance Smart Chain, so the fees are going to be a lot cheaper. And that brings us to the end. I will see you all on, hopefully I'll see you on tomorrow's show, because I don't feel too great, but I'm still here. And thank you for your support, guys. See you all tomorrow. Cheers for now.